So you're about to start a business, or maybe you've already got an existing business and you've come up to this question of sole trader or company. Let me tell you which one is better. Hello everyone, my name is Ethan Rishock and today's video is all about business structures and in particular sole traders and companies. So I'm going to go through the basics of both of them and then talk about what is better, when is the right time to switch from sole trader to company, and what are the different tax implications. So my first point on this is that everyone's situation is going to be unique. I know people it gets a bit boring saying that all the time, but at the end of the day, this is a big decision because it will change how you run your business, how the business is taxed, and potentially some asset protection issues. So I really definitely recommend seeking advice if you're even thinking about a company, because it isn't always just the best option. So let's first look at sole traders, and that's a very easy setup to do. Most people can probably do it themselves. They go and get an ABN, they may get a business bank account, they might have to register for GST, get a business name, all those things. They can do all these online. They may not even cost any money to set up, and they can be going within, half an hour or so of getting these registrations sorted. A sole trader is you. It's an extension of you. You're running the business under your name, it's under your tax file number, and it'll be all lodged within your tax return. But therefore that means that any profits your business makes are taxed to you personally. So they get added in with any other income you've got. So you might have an employment income still, or a rental property, or dividends. All this is going to go into the one return along with your business income. So the simplicity is great. It's great for people that are just wanting to start a business, people that are wanting to just get started at no cost. They can get started straight away. They might not be making much profit in the first few years. They might even be making a loss, and therefore it might be good to be as a sole trader. They just need to weigh this up, and it's an easy setup, but there is definitely some downsides to it. The biggest downside is there's not a lot of flexibility. All the profits are going to be assessed to you personally. So if you're already earning $70,000, $80,000, $90,000 was your original job, and you're chewing up, all those tax-free thresholds, all those low tax brackets, any profit is going to get added on, and you're going to start paying higher and higher rates of tax. So that's definitely something you've got to consider. The other risk is that it's you as a person, and therefore any risk that business takes on, you're taking on as well. So all your assets that you own personally are potentially at risk if you get sued, for instance. Now, definitely seek legal advice from a lawyer. I'm not a lawyer, but there's definitely asset risks with running as a sole trader. So let's look at our other option. Let's look at a proprietary limited company. So this is a more complex entity. I want to get that straight off the bat, that this is more complex. If you're doing all this yourself, you really want to make sure you have a good understanding of how tax works, how an entity works. But for most people, they're going to need to seek advice of an accountant, tax agent, when it comes to setting up a company and the day-to-day running of a company. So the setup costs for a company are varied. So you need to actually set up a company. It needs to be registered. There's ASIC fees you need to pay. Even if you use a self-service online method, you're still looking at probably around the $700 mark. And this can vary greatly depending on whether you go to an accountant, a lawyer. I think the last company I set up for a client was around about the $1,000 mark just for the company setup process. You could be looking at thousands of dollars if you go through a lawyer. So understanding there is an additional cost to set up the company in the first place. Like I said, a company is a more complex tax entity. So you need to understand this, that it's going to likely increase your accounting fees. You've got a separate tax return needing to be lodged because a company is a separate legal entity. So straight away, you've got an extra tax return. So it's likely always going to come with extra costs. And a company is something that really needs to make sure it's got financial statements. It needs to make sure the balance sheet is well reconciled and all these things ongoing. So the accounting fee is typically higher than that of a sole trader, even if it's a similar style of business, just because of the added complexity. So because the company is its own legal entity, it's assessed on its income or loss from a tax point of view itself. So it lodges its own tax return and it has its own company set of rates. So the current small business tax rate for a company is 25%. And this doesn't matter whether you make $1,000 profit or $10,000 profit. It's going to be 25% of the taxable income. Because the company is its own separate legal entity, it can be a lot less risky compared to a sole trader, because if someone is going to sue your business, they're suing that company. You may just be a director or a shareholder of the company, and it is a little bit more complex than that, but it potentially could shift some of the risk away from you compared to a sole trader structure. That's definitely one of the things people take into account when they're looking at sole trader versus company, is what other assets do they got, what needs to be protected. So as you can see, there are some major differences. We're talking about tax rates are different, we're talking about their separate legal entity versus not, and we're talking about the setup costs and the ongoing complexity of the two entities are very different from sole trader to company. So now talking about the big question, well, when is the right time to switch from a sole trader to a company? Or should you just start from a company? There is no one answer to this. I know that's what people may be looking for, but that's just not the reality. There's not a set income. It's not like you go, oh, when you hit this much profit, you should switch. Because it's going to depend on who's involved in the business, what other taxable income you've got, what assets do you own, are you looking for some kind of asset protection? So we'll look at a couple examples here just to show you the different tax implications. So let's say we make $100,000 profit. And if we're a sole trader, the tax on that, and we've got no other income, is going to be $22,967 approximately, versus a company's $25,000. So you can see if you're just making $100,000 a year, purely from a tax point of view, you've got no other implications. Well, a sole trader would make sense. You're likely to have less ongoing accounting fees. You've got no setup costs. You've got no ongoing ASIC fee, and you're going to be paying less tax. So you can see why it's not just a simple solution to go, oh yeah, set up a company, that's better. Now let's look at scenario 2 here. We've got a bit more income. Now we've got $200,000 of profit. So as a sole trader, and we're assuming again, we've got no other income, it's $64,667 of tax versus a company that's $50,000. So now we're starting to see as income is increasing, that tax rate is obviously increasing for an individual. We're going through the tax brackets into higher brackets. And those brackets are well above the 25% that a company is going to pay, and therefore the tax implications may swing in favour of a company. There's a lot more to this decision though. You can't just take money out of a company and not pay tax on it. You either need to pay yourself a wage, or maybe you're going to pay a dividend, or you might be taking some director's fees. And all of these things are going to then be assessed in your own individual name. So there's a lot more complexity when it comes to the tax side of things. But it can be a good advantage to use a company, especially someone that maybe already has employment income. Maybe they're already earning $120,000 a year. And they go, oh, I'm going to start a company on the side and it's going to make $30,000 profit. For them, it may make sense to use a company and use those lower tax rates compared to their individual tax rates. The other situation may be for asset protection. Like I said, go seek a lawyer. But someone may have a personal home that they own or some investments, etc. And they're in an industry that maybe is slightly risky, and therefore running that business as a sole trader may not be worth the risk. They may move it over to a company just for some asset protection purposes. Normally, if you're doing it for this reason, you're definitely going to obviously seek accounting advice as to whether the structure's right, but you may also need to go seek legal advice to make sure that you've actually got things structured in a way that is actually going to protect your assets. And then the final situation where I think it makes sense to be a company versus a sole trader is if you're looking at potentially seeking investment into your business. So maybe you're hoping to build the business up and then sell off some of that. It may be an easier structure through a company because you may be able to sell some shares in the company. It's not impossible as a sole trader, but it may be easier for you. Again, you're going to want to seek tax advice way before you do any of these things because they are complex. They're not everyday transactions. Therefore, I think it is wise to go and seek the right advice. So in summary, there isn't an easy, yes, do it at this point or don't do it at that point. But I think it's all going to come down to your assets, your income, and what the profits of the business are. Have a look at those things. Seek the advice from the start because it's going to be a lot easier if you get your entity right from the start. You're not going to have to go and change ABNs, set up new accounting software, etc. You can get all the quotes of, ongoing quotes, what it's going to cost you to set up a company, for instance. Get all that right from the start and you'll be in a lot better position in the long run. I want to hear from you. What topics do you want me to cover next? And have you hit that like button and the subscribe button? If you haven't, go do that. I appreciate you watching and I'll talk to you again on the next video.